morning. You're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading day. Let's go straight to our banner story. Remittances grew for the eighth straight month in September, signaling the start of a seasonal uptick ahead of the holiday season. Money sent home by OFWs climbed 5.2% year on year to more than 2.73 billion. Month on month, remittances increased by 4.9% from $2.61 billion recorded in August. Remittance inflows for the 9 months to September stood at over $23.11 billion, higher by more than 5% on an annual basis. The Bangko Sentral noted that an expansion was recorded in the remittances from both land-based and sea-based workers in September. The uptick in remittances helped boost household consumption 2 months ago despite the reimposition of stricter mobility curbs due to a Delta-driven surge in COVID-19 infections. Now, the Finance Department renewed its opposition to proposals to suspend the excise taxes on fuel, saying it would only serve to benefit the rich. The agency said the proposed suspension would likely improve the disposable income of wealthier households at a faster pace than the others. The DOF estimates higher income households to benefit by around 60% more from the suspension of taxes compared with lower income households. In other words, Finance Undersecretary and Chief Economist Gil Beltran said removing the excise taxes would benefit buyers who needed the price cuts in the first place. With this, he said the government would lose the progress it has achieved in leveling the playing field for taxpayers if it lifts the fuel excise tax under the train law. So instead of pulling the plug on fuel excise taxes, Beltran proposed that targeted measures like cash aid distribution be improved to assist vulnerable groups like the PUV drivers. Kicking off the markets report with a health check on our local unit, you can see the peso here trading at 50 spot 184 to the greenback vis-a-vis, of course, our ballooning, so to speak, trade deficit. Just to note that we actually slid, or the peso slid, the most in 7 weeks after companies and importers started boosting purchases of the dollar. This, according to Jonathan Ravelas, chief market strategist at BDO in Manila. There is strong demand for the greenback. People are seeing the US dollar to the peso cheap at below 50 levels. And of course, as reported, imports are rising for the holiday season. Now, another thing also that is weakening is the foreign inflows. In fact, it's actually turned into an outflow. You can see that on my terminal here. Foreign selling has accelerated in the past week. Of course, our benchmark has fallen after that rally last week, and the peso continues to strengthen. So our 5-day moving average of net foreign outflows is just above 316,000, below the 20-day inflows, which we had of $1.22 million already. Let's take a look at the opening of our index. We are sliding by 15 points. That is down 0.2% to 7326.82. Unfortunately, not going back, it seems, to those 7,400 levels that we were touching or even breaking through last week, so to speak. Let's take a look at the best and worst performers 6 minutes into trade. Alliance Global Group, which had just released their earnings as well yesterday. We will talk more about that with our guests later on. The best performer there up by 0.9%, followed by AC Energy and Robinson's Land, as well as Globe Telecom. On the downside, you've got Security Bank sliding by 1.8%, together with Aboitiz and San Miguel. Now, still on the energy companies here, I do want to break some earnings. Still, you've got First Gen's third quarter net income up by 6.3% year on year to the tune of $66.9 million here. That's on the back of revenues jumping in the third quarter by 30%. This brings their 9-month net income to $213.4 million. That's up 9% year on year. And finally, since we are on the topic of Globe, I just wanted to take a quick peek at Globe Telecom here. And this, as they mentioned, that ST Media may actually be, or they're at least in talks for a joint venture when it comes to their data center business. ST Telemedia, of course, is a Singapore-based company, and Globe, through its unit Innova Communications, has data centers which have midterm potential of 45 megawatts of power. They say that this partnership with ST Telemedia will accelerate Globe's data center growth strategy. You can see Globe jumping by 8 pesos, that's up by 0.2% to 3,388. Now, here to chat more with us, we have Luis Limlingan, Head of Sales of Regina Cap. Good morning, Luis, and welcome back to Business World Live.
Hi, good morning, Danny, and thanks for having me.
Luis, taking a step back, when you're looking at the economic indicators here, GDP print better than expected, remittances, 8 months of improvement there, better than expected at least for the last print as well. Can you say that the economic indicators are better than the investors were hoping for?
That seems to be the case, but of course, with I think with the release of the results, we've seen that the index has climbed to seven between 7.3 to 7.4 level, and I think they're just holding back a bit because again there's still some concerns. Obviously, COVID is always going to be a lingering, um, overhang, and then I think it's hard to distinguish because our inflation has moderated, but I think globally it's picked up in the states. People were surprised that it went up to 6%. So actually, we did better than the U.S. So probably it's hard for them to distinguish because they think the world as a whole they're going to be have suffering from these effects of hyperinflation.
Okay, can you explain the weakening, let's say, or pullback of the local bourse this week compared to last week? Was it just a knee jerk reaction to the GDP last week, to the alert level 2, or does it show that the rally did not have legs after all, or is this a healthy correction?
I think it's healthy at this point, and perhaps a lot of investors probably didn't or weren't overlooking the results of the MSCI rebalancing. Now there's addition of ASIN and Monday, but because of that, there's going to be a downweight in the other names. So I think people or investors are trying to rebalance their portfolio ahead of the MSCI rebalancing on November 29. So that is one thing I think that you have to consider as well. Perhaps they're also keeping from buying because if there's going to be any excessive buying or selling, probably they're going to be waiting until the end of November until that happens. And of course, the GDP is okay. Inflation has moderated. The earnings are better than expected. Now for Thursday, I think they're going to be waiting for cues from the BSP.
Mm.
If there are going to be any hints as to how they're going to address inflation. Since it's moderated, I think they're going to be holding off from using any of their tools that are on their disposal. And of course, I think it's forward looking. They might be giving projections how they're going to be seeing inflation and the dollar as well. So probably people are going to be paying attention to that in the meantime.
What is your short-term outlook for the levels here? Do you see this dropping further, or is there already a strong support that you're seeing before investors should start picking it up and look towards the end of the year rally? Are you still hoping for a Christmas rally?
Well, I think some are hoping that it'll fall closer to 7.2, uh, given that the economic data has become stronger. Hopefully, it holds. We don't want to see any sudden surprises. Hopefully, oil has been elevated, but let's hope it remains the same. The cases have been, at I think they're saying it's been below 2,000. In fact, I think on an average daily basis, we're doing much better than Thailand and Malaysia. So if those remain intact, I think people are saying that there's going to be some support, maybe at just the 7,200 level. Maybe that's an opportunity for them to buy. And of course, with the MSCI rebalancing at the end of the month, I think that presents another opportunity. Now, if the economic data still shows that the economy still continues to strengthen, then I think there could be the potential of a Christmas rally towards the end of the year.
Are you still looking at the numbers, the new COVID cases? Are you still looking at the vaccine story? Is this still linked to the movements of the bourse right now, or is everyone looking at, economic reopening now?
Well, I guess at this point, you can't help but get ahead of yourself because it's becoming less of a concern. I think so long as the numbers are manageable and they continue to decline, it becomes less of an issue. I hope we don't encounter it again next year where we're going to see spikes, right? I don't think anyone wants that to happen. So I think right now it's more of a time as to how we proceed to loosen the restrictions, allow for more economic mobility, travel, commerce, so that we can return to pre-pandemic levels. So I would think that people are now working on a timeline as to when that's going to be happening. And again, I think the assumption is that the cases will be less of an issue. Now, of course, I don't want to preempt anything. I'm not in the medical field, and I hope this trend continues that we're going to see less and less cases.
Okay, what is driving the net foreign buying and then the foreign selling? Are you seeing trends in the types of stocks that they're doing, in the movements, based on the alert level system of the Philippines, based on economic indicators, based on earnings? Why this shift, big inflows and then big outflows?
Well, I think it's just repositioning through different counters. One is that I saw at one point there was a stretch where the banks were being bought up. We saw the likes of BDO hitting 130, whereas a few weeks ago it was just at 110. BPI was already approaching 95, and it was already touching closer to 82. Metrobank was well over 50, whereas before it was just doing at around 45, 46.
Mhm.
And I think because the banks are the leading indicators, because if the economy opens, and I think activity is uh, going to accelerate. So obviously, it's going to be the banks that are going to be the first movers. Now, afterwards, which industries in particular are going to benefit? So I think that's where they're shifting as well. So you could see a lot of changes, whether it's in specific issues such as like gaming in bloom or construction in MPI, and of course the foreign who have a hard time deciding. I think they just use a proxy such as the conglomerates with SM and Ayala Corp.
Are you happy with the bank's third quarter earnings, in terms of their margins at least? And is this time to be entering the banks despite the fact that loan growth is still has some room to catch up?
Well, it is still off from what the pre-pandemic levels, but we're satisfied in the sense that it's better than what we expected, and they have been giving hints that to their loan provision that they see that the losses are going to be limited, the margins have been healthy at least. So even if so, one is that third quarter was better than what we expected. Still not what still far from pre-pandemic levels. But given how healthy they still perform despite all the obstacles, we're quite satisfied at this point.
What about the conglos? Is this, which ones surprised you here? Which ones can really indicate the strength of the economy, or the recovery?
Well, you look at the Congos in the index, those that are, I think, more of a proxy are obviously SM and Ayala Corp. Others that are more specific to sectors, you have the likes of GT Cap and MPI, for example. If you want, let's say, to go into, or you're bullish on construction, usually it's MPI. In specifics such as the auto sales, for example, it's GT Cap. So we've been seeing them hold their ground, but I think because uh, not for anything, because I think if you're a foreign fund and you just want to re-enter the Philippines, you want to go to a proxy which has a very good liquidity and represents the, I guess, investment thesis of the country.
Okay, and can you still play on, for investors, the diversification play, or should we be looking into specific sectors or stock picking specific stocks, or are you still more confident in this diversified economic play?
Perhaps since we're becoming a bit more optimistic and bullish, I think that now you can start to slowly go into something that's more specific, sector specific, right? Rather than very broad and defensive, because the expectation again is that 2022 will perform much better than 2021. Given that again, sounding like a broken record, but again, there's more economic mobility. It's an election season. Uh, so the expectation is that sectors that were really hammered during the last almost 2 years of COVID are finally going to return, almost back to normal.
Okay, so maybe time to look at those cyclical stocks that might have been hit by COVID vis-a-vis the defensive stocks. Thank you so much for those insights, Luis,
Thank
Regina,
you.
and Regina Capital. Here are other headlines for keeping our eyes on. The government's budget deficit widened to 8.3% of the GDP as of end September. This is higher than the 6.9% gap recorded a year ago, but is still below the DBCC's 9.3% projection this year. Total government revenue as a percentage of GDP fell to 16.3%, while expenditure to GDP ratio went up to 24.6%. RCBC Chief Economist Mike Ricafort said the wider budget deficit was largely brought about by the adverse effects of COVID lockdowns and increased state spending on ayuda. UANP senior economist Sid De Rosa meanwhile said that he expects the budget deficit to continue to widen in the fourth quarter as the government continues to raise spending to support the economic recovery. Now, ridership on the country's rail networks may take at least 3 years to return to pre-pandemic levels. Passenger volumes already rose by more than 170% year on year to 47 million between April and September, but that's still well below 2019 levels. Recall that the government imposed a 30% cap on rail passenger capacity during the strictest phases of the community quarantine. Capacity was only raised to 70% starting November 4th. The transportation expert Rene Santiago said the relaxation of restrictions will mark an uptick in ridership this year, but noted that ridership will not yet return to pre-pandemic levels for at least 3 more years. And that's a first look into the business day. Today is November 16, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.